FNBB, our third quarter construction confidence index shows that the sector continues to recover, and despite the index remaining low at 21, construction activity has picked up while tendering competition eased relative to the previous 6 months. Cees Bruggemans, chief economist at FNB, joins me in studio now to unpack the numbers that have been released. Thanks so much, Cees, for joining us today. Well, let's start off right at the top there. I mean, we have this index, confidence levels on the index remaining low at 21, as I say, but activity seems to have picked up. Run us through the current trend being noticed right now.
Okay, as you say, the confidence levels have dropped actually slightly from 23 to 21, meaning that 4 out of 5 contractors in the construction sector are still disgusted with circumstances. And at the same time, we do pick up from the survey that activity levels are rising, as you've indicated. Tendering seems to be easier compared to the last 6 months. Profitability seems to be better in the last few years. Insufficient demand as an indicator has become less important. Material availability seems to have tightened somewhat, nothing serious, but all these are indicators. And as to sectors, obviously the public corporations continue to show workflow, although it does seem to be on and off, but the Escoms and the Transnets and the Sunrals continue to be responsible for workflow. In the mining sector, there has been a pickup in activity, but it seems to be more a matter of sustaining existing capacities rather than expanding capacities. There seems to be very little coming out of government. Some provinces have awarded tenders, but others have postponed given the investigations that are taking place in the tender processes. So there is evidence of activity across the board, but it remains tentative at this point in time.
So a host of factors that you've outlined there. Let's drill into some of the detail on these fronts, because we talk about an easing back of competition for tenders coming through over the past period compared to the previous period, with activity picking up. Also, that it's having an impact on profitability. So let's look there, because it was competition that led to depressed margins in the first place.
And of course, you are comparing to the worst part of the cycle. So activity levels were at their lowest, tendering was at its most intense, profitability was at its lowest. And when we now look back, we see that the graphs are all starting to change direction, or have changed direction in recent quarters. So yes, there is somewhat less tendering competition, but it is still substantial. And yes, there seems to be a pickup in profitability, but it must be appreciated it is from low levels.
Yeah, and slow progress that we are seeing. When it comes to the sectors that you outlined, the mining sector really stands out because it increased spending in construction works, but more done so to sustain businesses rather than expand existing businesses. There seems to be an increased belief out there that we're not necessarily heading into a recession globally moving forward. To what extent is that affecting the kind of optimism about work coming through on account of expansion moving forward?
Yeah, that's a very important question. We still built in the qualification that if this overseas financial crisis, specifically in Europe, were to still intensify and you were to see fall off in activity and demand worldwide, then our mining would probably also delay and postpone. But if that has been overplayed and we do not see such fall off, or to the extent that it is expected, and indeed world growth start to pick up again, then I think from a mining point of view, we should see that flow through in the activity levels construction-wise in the mining sector. Expectations are pretty high at the moment, and we kind of worry as to the extent that that can still be disappointed by, for example, these global conditions. But if the worst does not happen, and we have a fairly easy workout ultimately, then the mining sector may commit more firmly to new construction work in terms of its capacity requirements.
If we do focus on a best case scenario and, you know, a recession not materializing, demand picking up, how does that influence the supply of construction materials? Because already you highlighted earlier that this is becoming more of a factor than previously.
Yeah, we don't want to overstate it at this point. The inadequacy of material supply availability has been mentioned, but it is still very much limited, except in specific instances, bitumen, for example, and certain types of steel. So yes, there is an indication, and we see that as evidence of picking up into activity, some tightening activity. But we would not want to overstate its importance. But obviously, as activity levels were to rise further, then we would see further evidence, I think, in the material availability.
Very briefly, your outlook moving forward. I mean, do we take this pickup in activity as a sign that prospects in the civil construction space are brighter, given the indications of recovery in activity, or not necessarily?
Certainly, the respondents to the survey indicated strong expectations for the fourth quarter. And we understand where that is coming from. We do just have these qualifications regarding mining, for example, as to whether or not overseas conditions interfere compared to allowing it to continue. Financing seems to be a problem in parts of the public sector. Central is now, for instance, a new instance. And when it comes to the big new projects, you basically have a technical aspect that the construction phase seems to be ending, and as these projects continue, it becomes more and more a machinery and equipment situation. Yeah. But construction activity falls off. So yes, we do expect construction generally to be in an upward phase, but we would not want to overstate the expectations at this point in time. It is not a straight line improvement that we're facing.